Welcome to Creating Wealth with Jason Hartman. During this program, Jason is going to tell you some really exciting things that you probably haven't thought of before and a new slant on investing. Fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine, self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 11 states and 17 cities. This program will help you follow in Jason's footsteps on the road to financial freedom. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Thank you for joining me for the Creating Wealth Show today. This is your host, Jason Hartman, and I'm glad to have you with us. This is show number 154, if you can believe it. We got a lot of shows behind us, don't we? Anyway, a couple things on the agenda here before we get to the meat of today's show. First of all, the Masters Weekend is coming up, as you know. That's on March 6th and 7th, and we were able to arrange a special room rate at the hotel where it is, and you can literally fly into John Wayne Airport here in Orange County, California, and you don't even need to rent a car. You can stay at the Costa Mesa Marriott. The event is at the Costa Mesa Marriott right there, and we got a special room rate of $109 per night. It's a beautiful hotel, so that is available to you. We are also announcing, by popular demand, and we have never done this before, a Creating Wealth online course. And this is a 6-week online course. It'll be 1 hour per week. And we will do this, even maybe a little more than an hour per week, every Tuesday evening at 6 o'clock Pacific time, where we'll have a webinar, and you will be able to ask questions, interact with the various speakers, and that'll be an online version of our very famous Creating Wealth Bootcamp. So we will have that up on the website here very soon, and so we've got that and the Masters Weekend, and that will start. The first class will be the week of the Masters Weekend, so if you go to both of those, you'll have the online Creating Wealth Bootcamp Intensive starting that Tuesday, and then Saturday and Sunday will be the Masters Weekend. So that should be just a phenomenal immersion into income and wealth creation for yourself. Also, I wanted to give you the address of our new office. Some people ask, I know you moved, Jason, because I heard you talking about it, and the address of our new office is 3333 Michelson, that's Michelson Drive in Irvine, California, 92612. Phone number is the same, 714-820-4200. And I'd like to give you, before we talk to our Denver local market specialist about the Denver market, I'd like to give you a little preview of the Financial Freedom Report newsletter and also announce the winners of our contest, our Masters Weekend giveaway contest. So I'll be back with that in just a second here. Here's a preview of the Financial Freedom Report, kind of showing some samples of some of the back issues and stuff like that. It's only a couple minutes long. I'll be right back.
Hi, this is Rich Rosell.
And this is Penny Haynes.
We're bringing you Jason Hartman's Financial Freedom Report.
Financial self-defense in uncertain times. Brought to you by the Platinum Properties Investor Network, offering a complete solution for building real wealth in the current economy.
In this July 2009 issue, we'll talk about why conventional 401k investing is almost like gambling, why buying and then holding onto property is better than quickly reselling it, and why now is the time to learn the ways of holistic survival.
But first, we want to wish all of you a happy Financial Freedom Day, also known as the 4th of July.
I'm Rich Rosell.
And I'm Penny Haynes, and we're bringing you the August 2009 issue. Rich, have you seen that picture of Jason on the cover of the newsletter?
Yes, I did. It looks like he's enjoying a little financial freedom himself, doesn't it?
Yes, it does. So before we launch into the news, here's a big cheers to Jason in his shades and his hat, and to everyone listening in today.
Cheers, Jason. Hi, I'm Rich Rosell.
And I'm Penny Haynes.
And today, we are bringing you the September 2009 issue of Jason Hartman's Financial Freedom Report. Jason has several big names in this issue, Penny.
I saw that. Jason has been fortunate to obtain interviews with major thought, political, and financial leaders. Of course, this just shows that Jason really does live out his motto, which is that you have to be willing to step out, take risks, and act upon opportunities when they are presented to you. And Jason definitely goes after what he wants in life. I'm very impressed with this list of guests.
And that attitude has paid off nicely for Jason in more ways than just interviews. That's how he made his millions early in life.
Very true, Rich. Very true. So tell us more about these luminaries Jason has been interviewing.
Well, while others are dancing with the stars, Jason has been talking with the stars, and he's had some great marquee guests on the Creating Wealth show.
Welcome to Volume 1, Issue 11 of Jason Hartman's Financial Freedom Report. I'm Penny Haynes.
And I'm Rich Rosell, and we're bringing you the latest economic updates for November 2009.
Rich, when you think of financial masterminds, who comes to mind pretty quickly?
You mean beside Jason, right?
Yes, I do mean beside Jason.
Well, off the top of my head, that would probably have to be the venerable Warren Buffett. He's been considered the investing guru for quite a long time now.
Agreed. And people pretty much treat his strategies as gospel, don't you think?
Yes, I do, but I have a feeling you are going to tell me something new about Buffett's strategies, correct?
Yes, well, in a moment, I'm going to share what Jason has discovered about the Buffett philosophy of investing in value-based fundamentals and the factor that most people overlook in regards to fund management.
Now that I would like to hear.
Welcome to Volume 10, Issue 1 of Jason Hartman's Financial Freedom Report. I'm Penny Haynes.
And I'm Kent Covington.
And we're helping you to start off 2010 armed with financial self-defense in uncertain times.
If we ever needed financial self-defense, it would be now, wouldn't it, Penny?
Absolutely. Unemployment is high and not expected to drop significantly for quite a while. And businesses like Home Depot just announced another round of layoffs and store closings. Honestly, it can be downright scary.
Agreed, and that's why in this issue we'll discuss why micropreneurship is the employment of the future and why the recent stock market rally is based more on faith than on facts, and why you should consider Indianapolis a prudent real estate market.
We'll also talk about actually designing your income, give updates on the economy and credit market, and explain how anyone can go from zero to success in today's world.
For more on how you can obtain previous issues, buy or extend your subscription of the Financial Freedom Report, download free episodes of Jason's Creating Wealth podcasts, learn about individual coaching programs, the Creating Wealth Encyclopedia, Jason's 40-page white paper which predicts ROI in 35 cities nationwide, and receive special report supplements to help you prosper in this present economy, just go to jasonhartman.com.
All right, as you know, we announced a contest, and every week we're going to pick a couple winners, and there are two ways you can win this. One is a half-price gift certificate, and one is a completely free ride scholarship for the Masters weekend. And we picked two winners this time, so our investment counselors will call you, and one of you has won a completely free ride. And when we say free ride, that's 2 tickets, because our events are designed for 2 people to come. So we've got one completely free 2 tickets, and one, if you'd like to use it, it's up to you, a half-price gift certificate of 2 tickets. If you would like to enter the contest for the Masters weekend, either a full ride, completely free scholarship, that's tickets for 2 people, or a half-price gift certificate, please go to jasonhartman.com/contest. That's jasonhartman.com/contest. And we've got a few more winners to come, so be sure you go there and enter. And let's talk about the Denver market. We have several local market specialists flying out for the Masters weekend, several other great guests on wealth creation through real estate and income property, and also income creation through internet marketing, social media, and personal entrepreneurship, home-based businesses. And let's right now talk about the Denver market with our speaker for the Masters weekend, one of them, Joe, who is right here to talk to us about Denver. Here we go with the Denver update.
The city and county of Denver is the capital and the most populous city of the state of Colorado in the United States. Denver is nicknamed the Mile High City because its official elevation is exactly 1 mile, or 5,280 feet above sea level. The 105th meridian west of Greenwich passes through Union Station, making it the reference point for the Mountain Time Zone.
Denver is a perfect storm of opportunity as a progressive city that is a nexus for culture and recreation with a growing population and economy. With investments pouring into infrastructure, natural gas, and bioscience, Denver has many of the fundamentals that drive attractive investments. The city is showing signs of a natural real estate cycle that may signal gains in the near future.
Denver was the location of the 2008 Democratic National Convention, where Barack Obama was nominated as the party presidential candidate. This brought the city into the national spotlight and made more people aware of its natural beauty. For more information, contact an investment counselor at jasonhartman.com.
Denver has a very active pop, jazz, jam, folk, and classical music scene, which has nurtured several artists and genres to regional, national, and even international attention. With 300 days of sunshine per year, Denver is rated the second best place to live by Sperling in 2007.
Denver is home to a variety of sports teams and belongs to a select group of U.S. cities with teams from 4 major sports. Denver is also one of only 3 cities in the nation that has a team representing all 8 of the major sports leagues in the U.S., joining Chicago and New York.
Vail and Breck are both within 1.5 hours of Denver, giving the city access to year-round recreation and entertainment.
Denver is home to many nationally recognized museums, including a new wing for the Denver Art Museum by world-renowned architect Daniel Libeskind, the second largest performing arts center in the nation.
Forbes magazine rated Denver the 5th best state for business in 2007, and the Denver Bioscience Park has $1.8 billion committed through 2010, with $2.8 billion committed afterward. This is particularly important in the current environment of companies fleeing from states that are unfriendly to business for more attractive locations.
Denver International Airport is the nation's 4th busiest airport and is also rated the world's best airport based on a 2007 passenger survey. This makes Denver an inland nexus for travel because of its central geographic location and highly efficient airport. Denver is also approximately halfway between the large cities of the Midwest, like Chicago and St. Louis, and the cities of the West Coast, another benefit for distribution.
Denver has begun a $4.7 billion transportation initiative for a modern highway and light rail infrastructure that is part of the strategy to make the station area of Denver a hub of transportation for the city.
The real estate market in Denver is heating up. The inventory of unsold homes recently experienced the largest percentage drop in 5 years. This is seen by many as an indicator of future stability and appreciation.
The city of Denver added 45,000 jobs in 2007, and its 2.0% employment growth was the 9th best in the nation.
Denver is in the midst of what may prove to be a window of opportunity. Typical real estate cycles last around 8 years, and the Denver real estate market started to level off in 2001. If Denver experiences similar movements as other markets, it may be at the end of another 8-year cycle and ready for future appreciation.
The high cost of living in difficult business environments on the coasts and upper Midwest is causing many people to look at Denver as a friendly place to live. Net migration away from the coasts and upper Midwest toward the southeast and mountain states is benefiting Denver as people and business move toward more business-friendly climates.
Unemployment in Denver is lower than the national average, while job creation is stronger. Since Denver did not experience the huge run-up in prices that other markets experienced, it has not experienced the same disruption as many other markets. Denver is expected to escape the job losses of a recession because of its highly educated workforce.
There are many beautiful homes available in Denver at prices that are highly attractive in consideration of Denver's many natural economic advantages and the inflated prices on the coast that many people are migrating away from.
In keeping with the Platinum strategy for investment, we are seeking opportunities to invest in recently built houses that are outside of the urban area in Denver. For more information, contact an investment counselor at jasonhartman.com.
Platinum investors have the opportunity to qualify for preferred pricing. With a 5% price discount, a 2% interest rate buy-down, and property management available, now is the time to invest with Platinum Properties Investor Network. Our investment counselors are ready to help you accomplish your goals. Visit jasonhartman.com for an opportunity to schedule a one-on-one consultation.
With its progressive light rail and station area, Denver is creating a mass transit community that will not be confined to cars for their transportation. By building an efficient transportation hub within the city, urban citizens can travel to multiple destinations in a short period of time.
An example of the exclusive offers available to Platinum customers is a brand new home that is a model leaseback by the developer. This property includes a price reduction, paid closing costs, and an interest rate buy-down with property management available. Platinum is able to secure these opportunities because of its relationship with developers and its broad reach across multiple investment markets.
With new retail space being constructed in the Denver area, there are many things to attract tenants toward our targeted investment areas. With appealing architecture and contemporary shopping available, Denver brings many of the conveniences typically associated with larger cities to the fingertips of your tenants.
Some of the opportunities available in Denver are model leasebacks, where the investor purchases a model unit from the developer and the developer leases back the unit until the units are sold. This can represent a tremendous opportunity for investors, since these deals begin producing cash flow immediately after they close. Considering that tenant vacancy is one of the primary risk factors with real estate investment, a model leaseback may be an ideal way to smoothly move into your income property investments with minimal disruptions.
At Platinum Properties Investor Network, we recognize that the most important feedback we receive is from our customers. Many of our customers have been very pleased with the Denver market and with the experience of buying through Platinum. We believe this is because of our insistence on creating the complete solution for real estate investment. This begins with education, continues with your investment counselor, and concludes when you purchase an investment property and contract with high-quality property management that's been screened and recommended by our network. Since investing is a continual process, we've structured our network to make repeating the process of real estate investing as easy and straightforward as possible.
If you are interested in the investment opportunities available with Platinum, contact your investment counselor for a one-on-one consultation. In addition to the investment properties, ask your counselor about our coaching programs, where they will work alongside you to develop a holistic strategy that merges attractive investments, solid financial planning, exceptional education, and a strong focus on personal values to help achieve your goals now and into the future. We are ready to help you realize the success that you have dreamed of. Are you ready to take the next step?
Glad to have Joe on the line today. He is our local market specialist for Denver, Colorado. And Denver is one of those creative class cities. It's a very desirable city. If you have visited Denver before, you know what I'm saying to be true. And Joe, tell us what's going on in the Denver market. Welcome.
Thank you for having me, Jason. It's a pleasure to be here, as always. I appreciate the opportunity. We have a lot happening in the Denver market, and it's a very exciting time for us. We have gotten into the rehab business over the last basically 2 years. And the reason we got in the rehab business is because we had been developing for about the last 20 years in Denver, Colorado, and we've seen the ups and downs of the real estate cycle in Denver, but we were presented with an opportunity to start buying real estate basically below replacement cost, which is giving us the opportunity to present very good deals to investors around the country who are looking to take advantage of some of the cities and some of the areas that are really going to be the first to rebound, which I've been saying for the last couple of years. I really think Denver is going to be one of those markets to see the recovery and see one of the first to see the recovery.
Well, the National Association of Realtors, for whatever it's worth, and I know they have their share of critics, including yours truly sometimes, really speaks highly of the Denver market in terms of the comeback and the rebound. Forbes is always ranking Denver as one of the top cities for singles. There's ample recreation. There's a good broad range of economic drivers in Denver. And, of course, the skiing isn't bad either. That's pretty close by. I know that you're buying these properties, you're rehabbing the properties and improving them, and then our clients can buy them in kind of a turnkey arrangement with potentially a list of waiting renters, right?
Well, that's true. What we do is we have a specific area of Denver that we really like, and it's called the Green Valley Ranch area. And a new Gateway Office Park is part of that area. But we probably have about 18 to 20 homes at all times in this area. And I'll get multiple calls each day from people that aren't necessarily in the market to buy a home, but they really want to rent our homes because we basically go in and make the homes like new. You would think that you'd be walking into a builder's model home in some of the homes that we rehab and stage. They're 100% move-in ready, everything from appliances to blinds. And what I'll do is I'll collect these names of people who are interested in renting, and I'll let them know that from time to time we have investors that are purchasing these units, and that I'd be happy to put them in contact with our property manager, Darren Roberts, who's been working with me for the last 5 years. And I would guarantee that any investor purchasing a property through us would have a tenant in that property within the first 30 days. I would say that I would guarantee you wouldn't miss a mortgage payment, and if we didn't have a renter in there before that first mortgage payment was due, we'll pay the rent.
Joe, talk to us in general about the city of Denver and about its desirability. You recently completed a new mass transit project there in the city. There's just a lot going on in terms of vibrancy, isn't there?
There's a lot of vibrancy, and it's a very, very progressive city. You mentioned the creative class. We have a huge educated population. You also have recreation, which you touched on. 4 of the top 5 ski resorts in the country are within an hour and a half to 2 hours drive. You mentioned the infrastructure project, which we call T-Rex and Fast Tracks, which is a total highway development with light rail access. Gateway Office Park and Green Valley Ranch is one area that we believe is going to be hugely impacted by Fast Tracks and the T-Rex project, because a light rail stop and one of the major light rail stops is going to be basically right on the edge of this new neighborhood called Green Valley Ranch, which Oakwood Homes first started to develop Green Valley Ranch in the early 2000s. All of those factors combined with not above average employment, but Denver has avoided a lot of the bubble appreciation and a lot of the bubble employment since the dot-com crash in late 1990s, 2000s. And since then, our employment compared to the rest of the country has been very, very stable, averaging around 2% per year. All of those indicators, the creative class, a highly educated population, infrastructure changes, bioscience is a huge market in Denver right now, and just about 5 minutes away from our desired investment area is going to be, right now it's in operation, it's under development, but Fitzsimmons Bioscience Campus. By 2015, I believe they're saying this is going to be one of the largest bioscience campuses in the entire world. So you have a lot of infrastructure development, you have commercial development, you have a lot of bioscience development, and also you have a lot of oil and gas, which is definitely a big industry right now and is only going to become bigger as we move forward. Natural gas as well. We have huge natural gas reserves in Colorado.
Sure, yeah. Well, a couple of the things we didn't mention yet. Of course, Denver was the home of the 2008 Democratic National Convention. It has 300 days of sunshine every year, and according to Sperling's Best Places, it's rated as the second best place to live in the country. And then, of course, you've got 5 professional sports teams. In terms of culture, you've got a new art complex. Is that new, that complex that you have?
It's relatively new. This was completed in the early 2000s, and it's actually the second largest performing arts complex in the country. So, I mean, you hit it right on the head as far as desirability and recreation. 5 professional sports teams, the second largest performing arts complex in the nation. It's a very artsy community. Daniel Libeskind, the architect for the New World Trade Center building, is the person who designed our art museum, and that was just opened in 2008. And it's a beautiful building.
When I'm traveling, my favorite airport in which to change planes is Denver. You've got the most beautiful airport of all.
If you're going to get stuck somewhere, the Denver airport is the airport that's probably most favorable to be stuck at. And that just goes right along with our desire as a city and to be a world-class city, and that includes infrastructure and transportation. But the Denver International Airport is consistently ranked as a top 5 airport in the country and often one of the top 5 airports in the entire world.
Joe, talk to us a little bit about some of the specific properties one might buy there and kind of how they pencil out and what their size ranges are and so forth.
One of the perfect models that we buy, and one that has done very well for us both as a rental property and just selling to the primary market, because we have huge success right now selling to the primary market, especially to first-time home buyers, as you know. But investors should be prepared to buy a house that's around 1,500 to 1,600 square feet. The purchase price would be around $155,000, which is fair market value in Denver. You may be even sneaking in there with a little bit of equity, but that's fair market value. And it's hard to get appraisers to appraise a property today basically higher than the purchase price. But for a house that's 1,500 square feet, you're picking it up for around $155,000. With 25% down, you're going to be looking at cash flow of around $100 to $110 a month. Rental income would be $1,250, possibly $1,300, depending on how nice the house was accented inside, stainless steel appliances, new carpet, new paint. And really, a conservative estimate would be about a 19 to 21% return on investment in the Denver market, and that's using pretty conservative numbers, pretty conservative appreciation rates. But I think that's a very conservative estimate. You're going to have a chance to buy new property. We really like the 2004 and new. We go in and we have everything updated. You're going to show cash flow, but cash flow to me for a Denver market is really secondary. It's great to maintain that property with positive cash flow. You don't want to be negative, but the big play, in my opinion, and from my experience in Denver, is really the potential to build equity in an area of Denver that is going to be majorly impacted by the new infrastructure changes, by new residential, educational, and commercial development. Basically, you have very easy access to DIA, which we just mentioned, Fitzsimmons, which is the bioscience park. You're going to have the light rail influence, and then you also have downtown, which is just a 15-minute drive from our area, Green Valley Ranch and Gateway. We also would have a type of product that would be a little bit smaller, that would be around 1,200 to 1,300 square feet. For that type of product, you'd pay around $135,000. The rental income will be about $1,050 or $1,100 per month. That's going to give you cash flow of around $120 and give you a return of maybe 21 to 22%. But that's a smaller property. That's not going to be as big of a lot. But these are single-family homes. And like I said, they're basically brand new. They're basically 100% move-in ready.
Good. So as a sort of world-class city, and when we refer to creative class cities, we're referring to Richard Florida's book entitled The Rise of the Creative Class. And Denver was one of the cities that he really highlighted as a creative class city because it's got recreation, culture, natural beauty, et cetera, et cetera. So the thing I always say to people, Joe, on those pro formas is if you're looking at something that's got a projected 20, 22% return on investment, and this is on an annualized basis, I always say, let's assume it doesn't work out that well. Let's assume that it only works out to be half as good as predicted. I mean, you're still looking at 11% ROI. And boy, that's pretty darn good. I mean, that's equivalent to junk bond rates, which I would not want to be investing in junk bonds under these economic conditions especially, but equivalent to junk bond type rates on something that is far, far safer. And when you talk about safety, it's probably important for one to consider the somewhat counter-market cycle that Denver has gone through in terms of having a bust when a lot of the economy was doing pretty well, and kind of the cycle it's gone through. When we look at the past decade and we look at how various markets around the country have performed, what has been sort of the timing aspect of the Denver market, Joe?
Well, Denver was a huge .com industry. There's a huge office park in Denver called the Denver Tech Center. And a lot of the Denver Tech Center was developed during the .com boom, which was the late 90s, early 2000s. Well, when the .com bust occurred, Denver was severely impacted. And if you looked on a graph, you'd see during the years 2000 to 2003, 2004, employment just bottomed out. You had negative 45,000 job growth, basically. Once we started wringing out the excess of the .com bust, our economy really started to improve, and that was during the early 2000s, and that economic improvement continues today. We have been affected by the overall economy, but not nearly as much so compared to other cities. We've actually held very, very stable on our job growth and employment. Well, if you looked at the same type of graph comparing real estate prices, you're going to see that during the late 90s and early 2000s, we had big-time appreciation with real estate. And that went hand in hand with the phenomenal growth of the .com industry in Denver. Well, you see the exact same thing happen when the .com bust occurred. Real estate prices started dropping and going down. So from the late 2000s all the way through 2010 today, prices really started to level off 2004, 2005, 2006. February of 2009, the Denver Post had a huge front-page article that said, "Have we hit bottom?" And it basically talked about this decline in prices since the early 2000s. And we didn't see huge depreciation, but we didn't see a huge run-up in prices. So for the last 5 years, we've basically been on a plateau of stable prices, stable real estate prices. And now it's gotten to the point where, as I touched on earlier, now you can buy a house, it's cash flowing, but you're buying it at a price that's not inflated and that hasn't been run up from some huge boom in real estate. Prices have been very, very stable for the last 3 to 4 years, and foreclosures are dropping as well.
The National Association of Realtors called Denver the most affordable Western market of the major Western markets in the country. They said Denver was really the most affordable because its cycle was a little bit different than the rest of the country, which is kind of interesting because it didn't sort of experience massive speculation. It did see a run-up in the .com boom times, like pretty much a lot of markets did, and then a real leveling off after that. So the timing looks to be pretty darn desirable in Denver. What is your forecast for things? And just kind of conclude with whatever you want here in terms of why people should really consider Denver as a place to invest.
Well, when I talk to investors about investing in Denver real estate, for the last 4 or 5 years, I've brought up a few strong indicators, and we've touched on those in this conversation, but I just want to touch on them again. You have one of the biggest infrastructure projects in the country with new highways and a new light rail system. You have a progressive city and state with a creative class that has the desire to be a world-class city and will continue to try to bring in events like the 2008 Democratic National Convention, other industries. You have two very, very strong industries that are really starting to grow in Colorado and in Denver, and that's the bioscience industry and the natural gas and oil industry. And then, just like you hit on a few moments ago, you have affordable real estate prices. Lastly, you have a growing population and an economy that has not been impacted like the rest of the country. All of those indicators put together with a desirable location would make me, as an investor, think that this would probably be a pretty good time to get into the market. You can never guess the market 100%, just like a stock. I've always loved the saying that you never want to try to buy on the bottom 10%, but you also never want to try on the top 10%. So I would say the conditions right now in Denver are absolutely perfect for an investor to enter. And I really think that on a 5 to 10 year hold, people that got into the Denver market are really going to look back and be very grateful that they did. I would never speculate on a certain amount of appreciation in one region or the other, but what I can tell you is that I think Denver is very, very safe, meaning you're not going to have this market jump up 20% or decrease by 20% within a time span. I think that the appreciation on real estate over the next 10 years in Denver is going to be very solid. If I had to put a number on it, I would say in between 6 to 10% on average for the next 10 years. But just like you mentioned when we were going over pro formas, if it's only 3 to 5%, you're still doing a great job on real estate.
Yeah, that's for sure. Well, Joe, thank you so much for the insights. Investors can search properties and look at specific properties and see the whole pro forma with all the information at jasonhartman.com. And we appreciate you giving an update on this market, Joe.
Okay, I appreciate you having me. Thanks a lot.
Good morning, everyone.
There's never been a better chance to learn what you need to know to achieve financial independence. And it happens over the course of 2 powerhouse days, every spring and every fall, with a panel of 16 vibrant, intellectually motivated, and, I'll say it, slightly obsessed with real estate experts leading the way. There's a good chance you'll be sad to see it end.
This is the Masters Weekend, a gathering of experts, where we fly in experts from all over the country. We have guests here today from as far away as North Carolina and Colorado, and then we have experts flying in from many states all over the USA.
Probably the most interesting thing that I've learned so far is about the 1031 exchanges. I thought that was an excellent presentation, answered questions I didn't really even know I had.
And yes, we are planning to invest with Platinum Properties, and probably in the Go Zone, but perhaps not exclusively. And we were greatly impressed today with the surroundings and the glamour and the style, but also the information.
Don't wait to buy real estate, and then wait.
The Masters Weekend is a twice-yearly special event, so don't wait another 6 months to learn the skills that could make you financially independent. Space is limited, so your immediate registration guarantees a seat in the room at Platinum Properties Investor Network with Jason Hartman and our gathering of experts.
This show is produced by the Hartman Media Company, all rights reserved. For distribution or publication rights and media interviews, please visit www.hartmanmedia.com or email media@hartmanmedia.com. Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, or business professional for individualized advice. Opinions of guests are their own, and the host is acting on behalf of Platinum Properties Investor Network, Inc. exclusively.